We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to talk about the anatomy of the recent gold sell-off. And we're going to use the chart GLD, which is the gold ETF, which is quite a good proxy for gold. Now here's the standard GLD weekly chart as on big charts. And we're going to look at action over this time, and we're going to focus on 2018, 2017. So now we're going to go to readtheticker.com chart, and here we have the most recent daily action. Now here we have the daily bars coloured in green and red, and correspondingly down below we have the red volume bars where it's the price bars are red up there, and we have the green bars down here where the bars are green up here. This is the sell-off which we're going to study. Now why are the bars green and red? That is because the green and red is dictated by the calculation of a point and figure chart based on 0.3 wave or 0.3 move and a 3 reversal. Here's our point and figure chart. So these waves here, this red swing down here, this red downswing, is this red downswing here in the price action, and that's the volume associated with it. Up here we have the volume bar associated with it. Oh, that one there I think it is. Right, so that's the summation of all the volume for that downswing. Okay, and what we have here, this volume hills indicator, is basically, you know, just drawing the hills of the volume per bar. This is volume per point and figure bar. So this swing down is a mirror of this red part here, and the blue swing down. See how the blue action, that's the up bars, and the red action is the down bars. See how the red is the up and the blue is the down. Rightio? So red up, red down, blue up. Now those who have read Richard Wyckoff, he says, and I quote him, "In the end I tell my students to study price action, study the waves of price and volume." And we're going to look at this chart. We're not going to consider any fundamentals, or we're just going to see whether there was any forecasting going on of supply and demand by the waves, because each move here is a wave. Like I said, this downswing here is a wave. See, this downswing here broke out of that little dip there, bounced there, and it sold off. That is a wave down, and there's the volume associated with it. So we're looking at waves, we're looking at strength, we're looking at thrust. We want to study what happened. Okay. As we can see here, the volume hills indicator, which is a just drawing the top line of the point and figure volume per bar. There's the bar or the wave, right? The peaks and troughs. We can see that for this period here, right, that pretty much the red hills or the red volume bars were higher than the blue. See how the red bars here are higher than the blue? So all these little downswings at resistance, alright, this is pretty important resistance, all the downswing volume was greater than the upswing. And what's so what actually happened here? We had a situation where here we had a good situation of good upswing and volume, bit of strength coming in there. Okay, this is good strength there. Come on, my fingers coordinated. That's better. And which is a mirror of this area here. Okay, plenty of good volume on that upswing there. But what actually happened was it petered out, and most disappointingly, at this point here, this upswing here, the volume for this upswing there to the resistance, which everyone thought might be a breakout, was really a pump up to continue selling into resistance. Okay, because it's very, very weak. This point here, and all the supply, and we hoped, if you're bullish, that supply, or that supply down here, would be overcome by stronger demand. But unfortunately, as you can see by the volume hills, the blue volume hills never got greater, or not really got greater than the red volume hills, which means supply was dominant in this pattern here. So from between here and here, this box, this was dominated by overwhelming supply on downswings, and it was never overcome by demand. And therefore those shorts realised that there was no demand in the house, or there was no demand in the market, felt confident they could punch prices lower, as they have done. Now all the COT reports and all the sentiment shows that this is extremely oversold, which is about as oversold as it was down here, if not worse. So the trade, and yeah, I think the other interesting thing is this point here, we had the last dip and an option expiration. So all those people who set up their options around about here or here, probably 3-month options, they just expired. So they just banked a nice little healthy profit. We also know the big boys, they like to accumulate positions on the downswings, but before they want to accumulate, they obviously want to clear out their shorts, right? So this move here, this downswing, is an accumulation, I believe, because of the upswing here. And once again, they've done the same scenario here. Now I hold that view that this is bullish and accumulation because we haven't, you know, so far we haven't gone down to 100. We haven't punched down to 100. Notwithstanding what happens in the future. But what actually happened? What's the story here? We had this big volume spurge up here that surprised the market. A lot of people went positioned. So that was a lot of buying, true buying there. It was slowed down here. They wanted to accumulate. They didn't want to accumulate at 130, 140, 150. So they got prices down. They accumulated on the downswing. As you can see, I think you were studying the pattern here. The supply started to creep up. See how the red hills are low, and the red hills started to rise. That means the supply was coming in to stop the demand process. Which I don't really have that part down here. Oops. So it was quite evident this advance surprised everybody. I wanted to slow it down, did some option trades, punched it down, allowed to accumulate an average price which is around about here. You know, got a good average price of accumulation, let it go up. Once again, slowed it down. Now another accumulation, and I believe we're going to see a bottom out here and another type of accumulation. So the average price of accumulation, the average cost of buying is going to be somewhere in here for the rather large accounts. As this continues to be a much longer building of the cores. Now we all know it's got a massive rounding bottom on gold. So if as long as 100 or 98 holds, I still have a bullish bias. But what I wanted to show, this here, whole process here was a setup. Resistance. Alright. For Wyckoff phase we had some strength here, setting up here, obvious build up of supply, pushing it down, shown by the more volume on the downswings than there was on upswings. So if you're along here and you saw that build up, let's say you're hoping for a breakout up here, you were very disappointed at this point here. And disappointment normally means it's setting up for sell-off. So I also want to highlight our customary tool of volume hills on the volume bars shows who's in control. Now in the gold chart there's a lot of battles going on between supply and demand. For example, we had a demand process here. This is a very good demand process, very clean demand. Demand was clearly in charge as the blue dominated the red. A bit of a supply shock here, but as you can see here, supply stuck up its head, it was overcome by demand rather quickly. See how the blue bar turned around? It's always good to see when the supply is so great that demand turns around and overcomes it. See how the supply was great? And then demand overcomes it, which is just a mirror of those bars there, see? And demand continued on. But what happened here? This bar here, we had a large supply. Unfortunately, the next bar, this one here, did not overcome the supply. Lots of supply, where's the demand? Never overcame it. So that means there's lots of supply on that wave, never overcame it. See that? Even though it was quite a large bar, never overcame it. I think it was further down, that one there, right? Never overcame it. So basically, supply was in the house, was dominating, so there was a change. Now, if you're a trend line drawer, right, all this action is happening before the trend line breaks, or the channel line breaks. This is going on before it breaks. So this change in the demand and supply based on price action or wave and volumes was well forecasted a danger. You needed demand to overcome supply here because supply had increased dramatically. See, supply increased dramatically, but demand didn't really step up or try to step up until this bar here after the trend line broke. After the trend line broke. But unfortunately, supply overcome that demand rather quickly, and we're going lower, right? So it's always good to know how to use supply and demand, and to be wary of it. And the point and figure chart, using volume per bar with the corresponding price action chart, helps the chartist to understand Wyckoff's understanding of following price action of volumes and price in the wave structure. Now this wave structure is determined by 0.33, and you can determine which one best suits you. I mean, the larger, smaller charts, you know, like weekly charts, have less. Not sure, but as you can see here was a trend line. We'll just draw that trend line again. Trend line, as well as this one here. Trend line. In both cases, the supply battle or the losing demand battle forecast weakness at a high, at resistance. Now, trend line. Sorry. So, here's resistance. Trend line. Trend line. I'm getting better now. Here we go. And both these boxes where the trend line broke, it was well forecast by supply down here that there's so much supply in the house that the trend line would be definitely challenged. And for the retail trader to know that is advantageous into using puts and calls. So that's the anatomy of the recent gold sell-off. My bet is that point and figure charts are not widely used out there. That's because they're not that well designed by other software packages, and they don't get into price and volume wave action and using indicators and explaining what's going on, as well as the readtheticker.com. So if you're a Wyckoff fan and you want to learn more about point and figure, get a readtheticker.com subscription and start learning about it. Thanks very much for watching.